What's happening, guys? We are coming at you with another Sunday scan, this time for January 25th. It is going to be the fourth week of 2021, which is insanity. It is making 2020 look like a joke so far. I hope that it keeps up because the ability to compound gains right now, I've never seen anything like it ever. I said that a lot in 2020, but this is nothing compared to 2020. This is huge. There is so many opportunities. It doesn't matter what type of trader you are. There's opportunities all around. Short trader, long trader, options trader, OTC trader. But what it's all about is focusing in on what you're best at. I can't do it all. I have to focus on a few names as well as potentially manage, a bunch of swings. If I try to do more than that, I might start letting some of these things go, missing some of these entries or exits and things like that. Give you an example. Cody, odd stock trader that you guys know in the room. He's having a phenomenal year. He's already, I think, double last year, which was 10x his best year ever, and, you name it, whatever. He's mostly trading OTCs. And, he's feeding me them all the time, like, hey, check out this chart. Hey, check out this chart. And, I'm participating in some of them, but I just don't have the capacity to do it all. If I do try, then I end up maybe missing, this other one that pulled back and I should have sold out or whatever it may be. So you have to make sure that you're staying focused, that you're staying on course, and that you're trading what you're best at, what you're prepared for. Because if you try to do it all, you're going to start to go backwards. And, I see a lot of different traders. Riley Trades on Twitter, Mason. I just had recently kind of started to pay attention to him a little bit after he made a major donation to the Barstool Fund. He's been in the room for a long time, but I hadn't really, kind of zoned in or focused on his particular style. But I see that he does a lot on OTCs, just like Cody. So these guys are specializing, focused in that niche. And, I'm focused somewhere else. But the point here is there's no one right or wrong way, right? There's so many different ways in this market right now. And you could be the greatest short seller, but maybe that's hard right now. Or maybe you're timing it right and it's perfect and it's great for you. I'm still having a balance of long and shorts. Obviously I love shorting. I feel more confident on the short side. However, the way that I've made adjustments is saving me a lot. If you go back 6 months and I'm doing the same trades, I'd be getting blown out. Right now, it's all about letting everybody else pre-exhaust. Let everybody else figure it out and figure out the top for you. Right? And then you start to come in and participate. And it's not about getting the top anymore. It's all about the meat. And there is so much meat on the way up that you don't need to get that top, because when things start to pull back, all that range on the way up, there's plenty on the way down. And everybody always wants to get the top, but what if you're 50 cents, $1, $5, $10 too early? You're not going to have an account, right? So I think that is a really big thing to think about right now. What are you best at? And I talked about this on the interview with Alex and Phil that I think comes out super, super soon. But eliminating what you're not good at, right? Where are most of your losses coming from? Where are most of your headaches coming from? Where's most of your stress coming from? I eliminated holding things into open. Rather than taking that pre-market trade and yeah, I'm on the right side, guess what? 2 candles, you're on the wrong side in this market. So for me, if I take a pre-market trade, most of the time, I'm out before open. I want a clear slate. I want to start everything over. I want to be focused off the open, because if I'm trying to manage this trade that maybe is not working perfectly, then I'm missing this one, and this one, which could have produced great returns with no headache. So that's the thought process that, how I'm trading right now. So one of the examples of what I've eliminated, patience. There's no reason why you should be in the market looking for little trades like this. If you're in, out, in, out, in, out, that's fine. That's a scalp strategy, and you'll always be able to make gains, but you're never going to make exponential gains. You're going to hold yourself back. So, although, it's nice to have that instant gratification, it's nice to always be able to scalp and know you're going to make a couple bucks here and there. Think big picture. Everybody that is great, everybody that I know that is just an extremely amazing trader, all gravitates towards that big picture view. So I think that that's very important. And, if you play it into your strategy, thinking bigger picture, you're going to realize that there's a lot bigger gains with a bigger picture view. But yes, there is some of those, intra-minute and special situations, which is what I focus on many times on these overextended charts. But where I've seen exponential growth is bigger picture. Last week, we talked about the importance of risk management and being aware of melt-up situations. You saw it firsthand this week. You had GME. You have, there was another one, I'll think about it in a minute. It's on scan. Melt-up. Oh, SOL, SUNW. So those are two that come to mind as well. But you've got GME, you've got GSX right now, you've got BBBY, you've got BB, and all these names that shorts are just on the wrong side. And nothing else matters right now. All that matters is the trend and the upside potential. And if you're on the wrong side, nobody cares. It's going higher. So you have to be super, super cautious. GME is another example of you don't need to be a hero and find the top. Let it exhaust out. At least if you let it exhaust out and you start in, you're wrong, you have a risk parameter, right? You're only, you're going to be wrong if you're down $1.50 because that's the high of day. You're risking off of it. You're not trying to find the top. You're being part of the backside, and if you're right, great. If you're wrong, you have your stopping point. When you're trying to find that top, you could be 5, 10, 15, 20 too soon. So there's a lot of blown accounts on GME, I'm sure. And a lot of people want to sit there and say, okay, that was the squeeze on Friday. We don't know that. It held extremely well. And if it does not go down, then I'd be extremely cautious because after the big upticks come the bigger upticks. And as you guys saw, 58 was really the key level, and it pretty much held that. So it's going to be interesting to see how that plays out. Before I forget, Nathan Fegan. Nobody got back to me the last time on the Icon meals. So if you are US based, you can win the box of Icon meals. As you guys know, I love those. And we did reach out to Scans. Scans is game. I'm getting a shirt for next week. But we will be giving out a month of Scans once a month as well. Next, I'll work on trade ideas. But I'm just always trying to think of different things to give you guys as a benefit for watching these things. But Nathan Fegan, if you want the meals, reach out to me, webmaster at investorsunderground.com. And if you just want t-shirts, that's fine too. Also sending out a t-shirt to Sang Chi and Array Akar. So email me as well. We're just going to fire out a bunch of t-shirts this week. And thank you guys for watching. As you guys know, all you have to do is leave that biggest takeaway from Scan tonight, like the video, and you are in the runnings for either Momo Trader's book, Icon meals, a month of IU, or t-shirts. One topic that I wanted to talk about before I get into the video topics is that, I'm brutally honest, and I never beat around the bush, and I never sugarcoat anything. And, whenever, obviously I talk to a lot of people, I see a lot of comments, I see a lot of action in the markets. And whenever I see something starting to come to a head, I always want to say something. And one of those is just, I think people are getting lazy. And, there's a lot of money going around right now. There's a lot of opportunities going on right now. But I'm getting a lot of PMs and DMs like, hey, what do you think of this? Hey, what do you think of that? Oh, man, I didn't see that one. When did you get in? What's your game plan? And it's all on last week's video. It's all on the prior week's video. It's all on Scan. So I want to make sure that you guys are putting in the work. And if you need that little kick in the butt, this is it. Because I show up every week and I put in the work. It takes me an hour of thoughts. an hour to do the scan and an hour to do a video like this, and then send it off to get it produced. I don't have to do that. I enjoy doing it. I enjoy, going back and forth with comments and all that kind of stuff with you guys. But when I get all these comments, hey, what do you think of this? Hey, did you read Scan? Did you watch Scan? And so whenever I see people starting to kind of get a little bit lazy, I always like to give a good swift kick in the butt to make sure that, look, if you want to be exceptional, if you want to be better than the rest, if you want to be that 1% that really kicks it up that next notch, if you want to be that person, are you putting in the work? Are you showing up? And I think that it's important to know that this is the very, very, very best time to be a trader. There has never been, I'm serious, there has never been this much opportunity on a daily basis ever. 99, 2000, sure, there was big moves, but there was fractions of pennies, there was fractions of dollars that you had to, call in a trade and say, hey, I want to buy here, and sure, it would go nuts. But there has never been a better trade or time to trade than now for the small trader to kind of build a small account to a big account and potentially have some type of exponential returns because of the current, market strategy. And, if you think about the pandemic, if you think about COVID-19 and how many people are working from home, and when everybody started to trade, the market has only gone up. So when these news items come out, when all these offerings come, when everything happens, people only know to buy and hold. And the sooner that you figure that out, the sooner that you accept that, the better you're going to do. I've accepted it. I did it last week on I said the TikTok video. As much as we make fun of it, they're right. They're right. That's what's working right now. And the faster that you are no longer too proud to admit that they're right, the more money you're going to make, the better you're going to do. And I've got a new shirt coming, Embrace the Chase. And my friend said it, and it's true. And again, it's bad to say chase, but you have to, as long as you have risk management, there's going to come a time that everybody's going to lose all their money because they don't have any risk management. They don't know what they're doing. They're going to find that out very quickly, right? Everybody that is long a bunch of these stocks in this current market, the majority of traders feel like they're right because the price is continuing to go up and nothing else matters. There's some charts about the unprofitable. Cody sent me something with Goldman Sachs, like unprofitable technology companies and like the market cap. And it's literally like it was kind of going down and then just straight up. So nothing else matters right now. But this is an amazing time to be a trader and make those differences in your accounts, those exponential returns. And if you're not, like I said last week, something has to change. Something has to change. It's not to make anybody feel bad about not making money right now, but it's time to wake up. I've talked to a couple buds, and they're trying to still do the same short strategy that they did in prior years. And I say, hey, this is like the 28th time you've tried it in a row. Like, at what point do you say, okay, I'm going to adapt? And, if you're having trouble with that, if every morning you wake up and you're like, what the heck, how is this still going up? I don't get it. Or why is this not going down? It has an offering. It has this. It has an ATM. Whatever worked in the past, if you're still wondering why it's not working today, then you need a reality check. So make sure that you show up, make sure you get prepared, make sure you watch, you don't have to watch my videos. That's, it's whatever you want. But if you're going to ask me questions and if you're going to be in the room, I assume that you're coming prepared and watching these. So that's just my thoughts. Reverse engineer where all this volume's coming from. Reverse engineer what's working. Reverse engineer what setups worked, what didn't, and why. Where did the volume come from? Who is on it? What are they doing? This will help you. Stop acting surprised at things that used to work but don't work anymore. Embrace the millennial way. They only know they only know to buy and hold. So things will last a lot longer. We had two great fades on Friday, which were ADMP and AZRX, which I'll go over. However, if you were trying to find the top, you got squeezed out. And maybe you made your money back, but you have to be patient. You have to adapt and understand that you need to let other people put in the tops for you. Stop being a hero trying to find the top. And last but not least, the last three things were offerings. You know, even on Thursday or Friday, people were surprised that a stock was going up on an offering. This has been the way for months. Adapt. Stop acting surprised. Joining trend is one of the best things in this market right now. If you're concerned about it, wait. 9:45, 10 a.m. plus. A lot of people get chopped up right after the open. And then they feel like they made a bad move because they sold out for a loss and then they were right all along. What did I do wrong? Well, you didn't wait. So if you feel unsure off the open, I feel unsure off the open. You're either going to nail it or you're not. You know, if it's a relatively flat open or whatever. I'd rather buy higher with proper risk. I'd rather short lower with proper risk. And that means risk, reward, it's better than 50%. If you're trying to figure out what way this is going to go, no thanks. But if something's going up, it's got a trend, at least you have something to risk off of. Or if it's going down, at least you have something to risk off of. But if you're trying to figure this out, good luck. And last but not least, like I said, melt up mode, be aware of it. We might have more of that. GME, BBBY, GSX, there's just so many examples. OBLN, another one, a super low float, stock that should have died and then continued to go. Everybody got squeezed out. And what can you take from that the next day? Everybody's going to be looking for the next big trade, the next one. They're all going to hold it. And when it stops going up, it's going to get heavy. And it did. And that one was B something or other. I already forgot the ticker because there's like 900 a day that are moving around. So anyway, let's get back to the second part, or let's move forward to the second part of the video scan. And that is the ideas, thoughts for tomorrow. But once again, this is one of the best times to be a trader. And make sure that you're firing on all cylinders. Make sure you're putting in the work. Make sure you're showing up early to get a feel for what's going on. But if you're trying to trade on a mobile phone, if you're trying to trade at work half the time and on the computer half the time, don't overdo it. Don't try to force something that's not gonna happen. If you're taking this seriously, if you're using your time during the day, sitting on the computer and getting that screen time in, take it seriously, put in the work, do the homework, and you're going to have better results. All right, guys. So first part of the scan is the main watches. Just like I talked about earlier, focus. So for me, my focus is only a few names, and then I branch out to bigger picture type of ideas, things that might need to be 9:45, 10 a.m. plus, things like that. So first and foremost was EXPR. EXPR was a Twitter social kind of push based off of GME. Hey guys, this is the next GME. And so it had a great move. It probably trapped shorts into close, and then it squeezed them out after hours. We've seen this time and time again. So I joined that trend. I sold the majority of it out after hours. Just like I said in the room, I felt like it could probably get some play after hours based on how each of the dips was getting bought, pretty much trap shorts and squeeze them out. So later on in the after hours session, I faded it as well. I faded my exit. That ended up being a pretty good trade. But for me, and yes, I am still holding a small portion. So, I had my swing trade account. I sold the majority of it. I kept small in case it gaps up more on Monday. But then my intraday trading account, I went ahead and shorted the backside of the move there. The thought for Monday coming up is going to be pretty much this 250 level. Higher the better. Ideally, it actually opens up higher and it does produce a much better opportunity. We'll see. It kind of came into about 220s, 230s. So higher the better. I'm going to assume failed follow through momentum. As long as 250s, 240s stays relatively heavy, you can kind of see 250 as that prior support becoming resistance, and then the next key level is going to be that 235 level or so. And the reason for that is prior support becomes resistance, and that's as simple as I want to make it for this type of trade. If we start to base and hold over 250s, then be aware. I mean, we could squeeze, and I'd love to see that. I'd love to see it get going and really provide a big move. We've kind of got into this gap. You can see, and once again, kind of looking left, right? So move this up a little bit, and you can see that it has failed, and then you come look at the 1 minute, and you can see where it also had trouble. So again, it never means that it's only going to go to that level and it's going to stop, but it means that there is likely going to be resistance in that area. So let it blow through, but if it starts to come back and get heavy under that level, then usually that's something that I like to trade. AMC is a super popular one right now. If you say anything negative about it whatsoever on Twitter, you will get attacked. It's pretty funny, but it's a good way to understand the social sentiment, like I talked about, and if you understand the social sentiment, then it's going to help you as a trader. But this was a long idea. Last Thursday, Friday, the trigger price that I had said was the 235, 240 level. It broke out, ended up closing relatively weak, which set up for that trap and gap. So we traded it long for that nice little breakout, and then had that nice gap up and fade. And then on Friday, we had two great trades, which for me, AMC, the idea was right over here, and it was at 193, 194. For whatever reason, it wasn't moving, but it was pretty much top on the list as far as, what could be the next GME, right? Everybody's going down BBBY, GSX, AMC. They're looking at all the 40, 50, 60, 80% short interest type names. And buying them. So I minimized this, of course, but great parabolic move. Then nice little breakout later in the day, and then Kramer dumped all over it and was like, I'm basically he's not going to say the same thing about BBBY and GME regarding a squeeze on AMC. He basically said they need money badly. Don't count on it, but. Higher the better. I mean, I don't care which way I trade this name. So far, I've had 2 longs on it and 2 shorts on it. And so the only thing that I care about is the volume and the opportunity. So, we've got 268 million shares. So this allows you, it's not every day that you have a $2 to $3 stock with, 10, 20, 30% moves or more intraday, where you can really size in, size out at pretty much any size that you're comfortable with within your risk parameters. So that's why it's on watch. I think key levels are going to be the 370s and probably the 340s, 345 level, and you can easily see that by just putting some lines across. Make it simple. I would not anticipate a squeeze unless we're based over 370s. I would not anticipate a breakdown unless we're failing at 350s. But you can kind of see levels on the daily where it could potentially have some more resistance, maybe into the 430s range. But for now, the social media, this is probably social media's favorite name. And in this market, you can't discount that. This is part of the adapting, the millennial way, the things that you need to accept as a trader to just realize that, hey, nothing else really matters right now except price, and just that's it. It doesn't matter that they are borderline bankrupt. It doesn't matter. Yeah, there's a lot more risk, obviously, with a name like this and a balance sheet like this. But for right now, nothing else matters. NNDM. This one continues to go. I've got it on a main watch because it's offering some great opportunities. Failed follow through. You can see that VWAP pretty much held. So that was the key level that I posted in the room. Basically 1360s, 1380s. came back to that level, consolidated, and then nice ABCD setup for the breakout. So I'd love to see this thing continue. I'd love to see it, parabolic towards 15, 16, 17, something like that, because that would be a fantastic trade. I can already see how it would play out. I would be pretty excited about it. Everybody's following the Cathie Wood play. This is like back in the day when everybody would buy everything that Icon or Ackman did, and then when everything hit the fan, everybody, all the small funds that were just mimicking their trades blew up. But at any rate, nice breakout. I don't want to be too short biased here. I did fade it the last 2 days, which was great opportunities. Minimized it on Friday just because I was looking for maybe that flush under the 1360s, but it never came. So you can see steady buyer in the tape. Don't underestimate this. And what else could be fueling this, right? So we want to watch DDD for that overall kind of feel in that particular sector or theme, like we talk about. So if this decides that it's going to go and do a melt up to 40 or 50 or something crazy, then yeah, I would expect an NDM to do something crazy as well. So just be aware of that. PLTR, I got to say, I was looking for the backside of the move, and the chart just completely fell apart. And it was a nice trade. It was down, $1, $2 off the highs, and I did not see this move coming. Well, I don't think many did based on the move, but that's a crazy move. Like that's not normal. This is 2021 right here. For a stock to go from basically 26 to 32, 33 in one day, it's just incredible. So we're coming into some major resistance from the prior move, 33.50s. So we'll see how that plays out. I mean, it pretty much went up there and kissed it. So far, I would assume that 33.50s is going to be that key level. So with that said, if it were to gap up 34, 35, I would expect it to want to come back and at least retest it. Not necessarily fail. There's a good chance that it would fail and continue back under. But I would expect that it would at least want to test it to the downside, confirm that, all right, that prior resistance is now going to be the base, and then look for continued breakout. But we should have a trade or two in the next couple days on this thing, and we'll see what happens. Other than that, the next section is failed follow-through momentum. So as you guys know, trades like this, I'm looking for higher the better, let it exhaust out, and then join that backside momentum. So just a quick tidbit. Again, I try to always throw in other, kind of hindsight examples, not necessarily hindsight because I actually took this trade, but kind of looking at, what you could have done to get a better edge or a better trade thesis, let something trade out, etc. So this is a great example of, looking left. You've got this consolidation here. You've got this fail. These are pretty much late prints, so I don't really count that. But then you've got this nice move into the open, stuffs everybody out, and unwinds. So this was a fantastic trade in the room. Pretty much was patient throughout the mid-morning. And I was out by, I think, 11 a.m. or so, but worked out perfectly. And ideally, we get a little bit of a morning push. Two levels that I would look for is probably that 185 all the way up to basically prior day's VWAP, which would be right around 2. So unlikely, but higher the better. And if it did pop up, I'd want to use sort of 2 as my guide for risk. AZRX was fantastic. This is another example of 2021, right? So people get excited about getting short because normally it would work. And then they get trapped and it squeezes out. And then they get that little feeling like, all right, I've done the right thing. I'm going to scale in. Then they get squeezed and then the panic comes in. So I want to wait for that panic. It's fine. I'll dabble a little bit here and there, but I will not size on the front side of a move until we have that exhaustion move. And as you saw in the room, I shorted at that 255 level on that post-exhaustion, and then I scaled into the trade from there. And I mean, this was another one where the volume is incredible. You've got over 179 million shares traded. So the ability here to trade, a lot more shares than you typically would is a real possibility, and you want to, for me, I like to take advantage of that in this market. So liquidity is key. Most of what I trade is super liquid. If it's not, then I don't even mention that I'm trading it. Typically, I just write like a big picture idea. Other ones that I'm watching, DNMR. I want to stay familiar with this trade, as well as EH. And this is, right now we talk about these wicks getting bought up, and UAVS is another one that's been pretty hot too. So, drone companies are getting, going crazy, but I want to watch this one. I want to watch DNMR. Not because I'm saying that they're at the top, but the day that they pull back, I'm interested. And, and it's not always going to be the first day that they pull back. A lot of times you get that pullback, comes back, pull back, and you get squeezed back up, and you're like, screw it. It's off radar. It's too hard. Then the next day it comes in. So the key is not to pre-exhaust. Set price alerts. So for these in the morning, I'll be setting price alerts so that, we have custom software in the room, and it'll ping me every single dollar, whatever I set it for, to make sure that I don't miss that opportunity. Continuation scan. So this part of the scan, like we always talk about, is the big picture ideas, things that could potentially continue, things that are extending, things that I've been swinging. Anybody that paid any attention last week knows that I was long Pola. I got long in the 7s, and like I said, I was long and I was up quite a bit, and I should have sold a lot more, but I didn't. It came back in, but as I said, I still felt pretty good about it. I felt like somebody had positioned that day, given the volume. You can go back and read and watch last video for Sunday to see my exact commentary about it. But basically, I felt like somebody had come in. It was a transitional day where they cleaned up everybody that wanted to sell, maybe got some shorts in there. And what you will notice is a lot of these big moves, if they've got a good chart, when they sink into the close, that's actually the trap. It's actually the trap where you think it's like, all right, it's finally done. Next day, it gaps right back up to the prior level. So that was great. I sized in again because I had downsized a little bit. They had an S3. I got a little nervous, and ended up getting a good piece of this. So that was great. PPSI makes me feel a lot like Pola, where, and again, this one I had been long, and, we discussed how important this 550 break was, let it come back, confirm, and, so yeah, this is almost another double for those of you guys that watch the video. But with that said, just like we just talked about, we've got this little pullback into the close. So whether this stays heavy or not, we will find out. But I like when it comes up here and it fails at the 10s, and it kind of gets everybody that was breaking the 10, buying for breakout. You shouldn't buy breakouts on these. This is all about accumulating when nobody wants it, as long as the overall trend is holding. But for me, I had ditched some. I replaced some into the pullback. And so, as long as this doesn't start to stay heavy and have a, fail 850s, fail 850s, fail 850s, start to fade off, then I'm still interested. And this is the type where, if it does gap to 950 tomorrow, 10, then that this was mostly a trap and worked everybody out into the close. So you kind of have to think when you're trading big picture, what is the overall goal here? And if people were buying for that breakout for 10, 12, and they didn't get it, they're going to be dumping into the close. So that's exactly what, is happening. Tiger, you guys know the deal there. I rebought, as I said in the room, from some of those 18 near 19 sells. Shorts are trapped. This candle right here tells you that. And, like I said, at the beginning of Scan, this is my best trade ever. So I had my best trade ever in December of 2020 in 17 years, and this is now better than that. And I still hold about 30% of my position. And I probably will go back up to about a half once this consolidation proves. But that's just on the locked in portion. So I'm pretty happy about this one. Anybody that's paid any attention since November, that I've talked about it every single Sunday Scan. And I got a ton of messages on this one. So great job to those of you guys that were patient. Great job to those that traded it. Also BQ last week, same thought process that I discussed. Big one. This was the idea at $6. It actually doubled. It had some crazy 200K bids. It had a 720K offer. I don't even know what that was about. But after hours, there was a 100K bid, 200K bids. They walked it all the way up past 12. So I went ahead and I was like, you know what? A double in a week. I'm locking some in. You can't see it on the daily, but if you go back, you can see it here after hours. And they just walked it up like crazy. Swipe, 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 swipe. So, something's going on, and you can see this volume here. So I don't know that this one's done. It might be, to me, it feels like that could be somebody accumulating, kind of setting the trap. They don't care that they're buying at 12 or 11 or 10 or whatever, because they're going to hold it like Tiger to 20 or, something like that. It makes sense for people to be shorting at 12 and 11 and 10, and that's probably what they want. But I need to be proven. I need this to prove to me that it's going to hold and base over those. Basically, 920 level was where that huge offer was for those of you guys that were watching. But I want to see it now base 920, 950s. If we consolidate for a few days, then I'll probably re-add the portion that I sold. But for now, I'm sitting with my 6 average, and see what happens. Couple others, POAI, nice charts. Again, same kind of thesis, just joining trends that are working. This is one of those post-offering type trades. I don't think I own it. I sold it on Friday. I sold it on Thursday and Friday, but it came back nicely, and I saw it on scan. I don't have my E-Trade up at the moment, but I'm pretty sure I'm out, but my goal is actually going to be, potentially to dip buy versus the 120s if it continues to stay strong. WYY, this had that huge breakout. Now it's coming back. I don't have a position right now, but if this starts to consolidate and hold over 1350s, I said 1213 on scan just so I'm not emotionally attached, but ideally I'd like to see it pretty much hold this prior top, kind of make sure that it ends up being support, if you kind of look at it that way. So as long as it starts to form a trend over this level, then I think we could have a nice breakout. And maybe this is one that we start talking about at 20, 22, 25. It's got all the writing on the wall for that type of move. So now we just need price to convince us of that. CIDM, another one. Same thesis, same, everybody always asks, what's your game plan on this? Same thing. On every single cheap stock, look at the prior level of resistance, support, and I'm interested. I'm interested if it's trending up, and I will add if it's trending up. If it starts to break out, I will sell some. If it starts to break down, I will size down. But right now, with the type of market that we're in, when things are going down, they're going down 5, 7, 10%. When they're going up 30, 50, or 100%. So the numbers just work, and so I'm letting it work. OPTT, you guys know the deal here. If you were at IU, this was a swing trade for me. Unfortunately, I sold a lot of it on Friday before the end of day move. It was ramping up. I felt pretty good about it, so I was like, you know what, I'm going to size down, because this swing trade kind of happened too fast. I felt like it happened too fast. I felt like it was too easy, right? Whenever a move is too easy, you want to be a seller, except this one right now. But I went ahead and sold some of it, so I'm probably about a 25, 30% position. But the idea was earlier in the week. I felt like, it could be one of those that, continues to break out, maybe 6 to 10, something like that in this market. So we almost got to the first low end target of 6, but consolidated. So ideally it pulls back, consolidates the next couple days, and sets back up, in which case I would start to get participate in a bigger manner. CETX had a wild push after hours, but overall that type of chart, this is the type of chart that I'm looking for right now. I look left, I look at the key levels that are going to be trigger points, and this is what I'm looking for every single day, day in and day out, on these $1 to $2 to $3 type names. And as it breaks this prior level, I like that dip versus support. And as it breaks the next one, I like to scale if it starts to form a base over 2 for that next level. If it doesn't, consider profits, or, there's nothing worse than overloading the position before it confirms. And, if you overload it, it's going to bring in emotional attachment, and that's never good. So last couple, MKD. The volume's huge. I participated versus the 110s. I sold some into the ramps. I held the rest over. So far, it pulled back after hours, so we'll see. I have a pretty good average. I'd love to see this thing start to kind of consolidate, whether it's at 120s, 130s, and then ramp red to green. We'll see. If it doesn't, that's fine. I'll move on. And last but not least, CBAT. We talked about it, not on Video Scan last week, but I think on Tuesday. But I've been participating in dips. The goal was versus 650s over and under as sort of the guide. As long as that overall 650 level pretty much held, I was a dip buyer and a holder. And so we had a nice breakout. But once again, same thing we just talked about. This means nothing. So what I want to see, I'm thinking big picture here. I'm not thinking about how can I make 20 cents on this name? So that may be different for some. Like, this is already a big trade for a lot of people. It's almost $1.50 per share. But for me, I'm looking at, okay, if this trade is correct, where can I scale into the next level? And that's the same thing that you saw on PPSI, same thing you saw on Pola. And I'm not saying that it's going to be, just like them and go to 20 bucks, but what I am saying is that chart pattern is working. So you want to be proven correct. So we're at a key level here. That's prior top. And then the next level is going to be the 9s. So if we start to base at 8s and start to break through 9 and 9 bases, that's when you're going to see the 10, 12, 13, 15 type breakout that you just saw on PPSI. I mean, you've got the same kind of chart thesis, same kind of chart pattern, where you see it pretty much become support over that prior resistance, and then it goes, same thing with Pola, you can do the same thing. Again, these are a little bit lower float, but you can see this prior resistance becomes support on the retest, and then away it went. So again, I'm not saying CBAT's going to do that, but if CBAT had a chance of doing that, that's the levels that we need to see confirm. Otherwise, if it ramps up there real fast, consider profits. There's no reason that you can't take profits. So anyway, I've got melt up mode. That's new. I've got a melt up mode on Scan. You can check that out. I've got a couple tickers that are currently in melt up mode, including DDD, GSX, as well as a handful of others. So just to kind of understand what ones are potential, just like GoGo. GoGo is a crazy short interest as well. So far, it's failed to really, take a huge leg up, but so did BBBY. It failed last week, and then all of a sudden it went nuts last week. So the key is to stay familiar, put price alerts, realize that, these can go, and if they do go, they can go exponentially compared to what they, typically trade like, and, let's see what happens. So last but not least, I've got the Staying Familiar Scan, which is just all kinds of charts that I like, some of which I am positioned in, and you guys can go back through the chat logs to see which ones those are. But, other names that you should just kind of have an eye on. Stitch Fix is going crazy. It's up 50% in the last week and a half. It may not look like it, but that's a huge move. That's a huge move. That's a huge move. So shorts are bent on that, and that's currently actually in melt up mode. So, that's going to be an interesting one. We've got a crazy week ahead. It's really all about next mentality right now, because I'll tell you one thing. Right now, for 2021, I am at 30% of what I did in 2020. We're in 3 weeks in. So if I come on Monday thinking that I'm the best and that I'm going to crush Monday and that I'm going to do, I'm going to end up going backwards. Every day is a new day. Make sure you reevaluate your risk. And just like we talked about, if you didn't watch last week's, go back and watch it. I talked about having risk management, joining trend, doing what everybody's doing on all the message boards is working right now. But when things shift, it's going to be bad. It's going to be bad for them because they don't have any risk management or process. You need to spend this time while things are good developing proper risk management and process. And if you don't, you will not be here in another year. So make sure that you take the time, make sure you review these thoughts, mine, other people's, whatever it may be, but make sure you show up, you're prepared, and you're not just kind of doing this as a hobby. Because if you're doing it as a hobby, stop wasting time. Take it seriously because we are in a market right now that literally can change your life, is changing lives, and you literally, just like I talked about last week, only need to get rich once. But most importantly, you need to keep it. Most people don't realize it until it's gone, and I don't want that to be you. We'll see you in the room tomorrow. Have a great week, and thanks for watching.